Is now the time to buy altcoins? Experts weigh in on Bitcoin, ETH, and the overall crypto market. Find out what institutional investors are doing and how global events could impact your portfolio. In the latest video from Altcoin Daily, Donald Trump's tariff announcement coincided with Bitcoin's price drop to $84,000 after briefly reaching $88,000. The video discusses the potential long-term impact on Bitcoin, citing institutional accumulation of Bitcoin ETFs, now at 6.2% of the total supply. They also mentioned two cryptocurrency bills in Congress focused on stablecoins and market structure, predicting that their passage could lead to major tech companies like Apple and Google integrating crypto wallets into their platforms, potentially onboarding 3 billion users. Additionally, PayPal is rumored to be adding Solana and Chainlink for its 200 million US users, and Fidelity is launching a crypto retirement plan for US adults with over $6 trillion in funds. The video analyzes Bitcoin's resistance levels at $96,500 and support at $70,000. While the integration of crypto by major institutions like Fidelity and potentially PayPal signals growing mainstream adoption, Trump's tariff announcement adds another layer of uncertainty to the market. Though the hosts present a bullish long-term outlook for Bitcoin, the short-term impact of global tariffs on risk assets like Bitcoin and altcoins warrants caution. The mentioned resistance and support levels provide a useful framework for monitoring Bitcoin's price action in the coming months. However, the market remains highly volatile, and external factors like global trade policies can significantly influence price movements. It's important to conduct thorough research and consider personal risk tolerance before making any investment decisions. In the latest video from CryptoRover, Bitcoin's price hinges on Trump's tariff announcements today at 4 p.m. Eastern Standard Time. Circle's IPO filing could pump billions into USDC, boosting crypto prices. GameStop bought $1.5 billion in Bitcoin. Texas approved $250 million Bitcoin purchase, and BlackRock got UK Bitcoin ETF approval. Eric Trump called Bitcoin the best store of value. CryptoRover predicts major volatility and will live stream the tariff announcement. He's betting on Bitcoin and Ethereum as safe bets in the current market and is keeping an eye on Hyperliquid. He believes Bitcoin will catch up with gold's recent gains and the altcoin market will rebound. Bitcoin is predicted to reach $87,000 to $88,000 soon and may fall to $72,000 if current support breaks. While the institutional interest from BlackRock, GameStop, and Texas is promising for long-term Bitcoin adoption, the short-term volatility tied to Trump's tariff announcements is concerning. It introduces a level of uncertainty driven by global politics rather than the technology or market fundamentals. While CryptoRover's optimism and bullish divergence spotting are noteworthy, caution is warranted. A trade war could easily spook investors and suppress Bitcoin's price, regardless of positive on-chain metrics or long-term projections. It will be interesting to see how the market actually reacts and if Bitcoin can decouple from these macroeconomic factors. In the latest video from Lark Davis, he discusses why now might be a good time to buy altcoins. He points out that Bitcoin dominance is high at 58.8%, similar to before previous altcoin rallies. He mentions the ETH/BTC ratio is at its lowest since May 2020, right before a major Ethereum bull run. He notes that global M2 money supply, a leading indicator for Bitcoin, suggests a potential market upswing in late April or early May. Also, the change in U.S. regulatory sentiment towards crypto is positive, with the SEC dropping cases against major players and the potential for altcoin ETFs like XRP and Litecoin by the end of April. Lark Davis presents a compelling case for altcoins, especially considering historical trends and the shifting regulatory landscape. The potential for altcoin ETFs is exciting, but it's important to remember that ETF approval doesn't guarantee market success. Investor interest will be key. While the M2 correlation with Bitcoin is interesting, relying solely on it is risky. The overall macroeconomic climate remains uncertain, and a broader market downturn could still negatively impact crypto. Therefore, while the signs are promising for altcoins, caution and risk management are essential. Personally, I would wait for clearer confirmation of a market reversal before significantly increasing my altcoin holdings. In the latest video from Coin Bureau, Nick discusses a Coinbase and EY Parthenon report surveying 352 institutional investors. 83% of these investors plan to increase their crypto allocations in 2025, expecting higher returns than other assets. 79% predict higher crypto prices in 2025. The report also notes growing interest in tokenized assets and DeFi, with DeFi engagement expected to triple in the next 2 years. Ethereum currently leads stablecoin activity, hosting 53% of it, followed by Tron at 28%. While the institutional interest in crypto is a positive sign, it's important to maintain a balanced perspective. The report's focus on U.S. and European investors might not fully represent the global sentiment. Also, regulatory clarity, while anticipated, is still uncertain and could influence future adoption rates. Finally, the excitement around tokenized assets and DeFi needs to be tempered with the understanding that these are still relatively nascent technologies with potential risks. However, the overall trend suggests a growing acceptance of crypto in mainstream finance, which is a positive development. In the latest video from CryptosRus, the host discusses the newly announced tariffs and their impact on Bitcoin and the crypto market. A 10% blanket tariff on all U.S. imports is now in effect, excluding Canada and Mexico. China faces a 54% total tariff, Taiwan 34%, and Japan 24%. Despite earlier rallies, Bitcoin dropped to $82,000 after the announcement. The host believes if Bitcoin holds at this support level, it would be a positive sign, especially amidst broader market sell-offs. He notes that institutional investors continue accumulating Bitcoin, suggesting long-term confidence in the asset. The host points to the 10-year yield crash as part of a strategy to lower rates, potentially leading to quantitative easing and a Fed fund rate cut in May or June. The tariffs imposed by the U.S. government undoubtedly create significant market uncertainty. While the host's optimism about Bitcoin holding at $82,000 is understandable given its historical support level, the macroeconomic landscape is treacherous. A 54% tariff on Chinese goods will likely trigger retaliatory measures, exacerbating global trade tensions. This, coupled with potential further market sell-offs, puts immense pressure on Bitcoin as a risk-on asset. However, continued institutional accumulation offers a glimmer of hope. It suggests that despite short-term volatility, large investors remain bullish on Bitcoin's long-term prospects. The coming months will be crucial for observing how these competing forces play out and determine Bitcoin's trajectory. In the latest video from Becker, he argues that current crypto prices, especially for Ethereum, present a buying opportunity. Despite the bearish sentiment, he believes a bull run is imminent, citing institutional investment in like BlackRock's significant purchases and the growing adoption of AI, RWA, real-world assets, and gaming on the Ethereum blockchain. Becker predicts Ethereum could reach $6,000 to $8,000. He also suggests Cardano, Solana, Avalanche, and Sway as good buys. For those interested in higher gains, he recommends looking into RWA coins like Mantra and Anandro, AI coins like Fetch AI and Bittenser, and gaming coins like Beam and Immutable X IMX. He emphasizes that this is a long-term perspective and advises viewers to conduct their own research. Becker's bullish outlook on ETH and the crypto market in general, despite current market conditions, is definitely thought-provoking. His points about institutional investment and the potential of AI, RWA, and gaming integration with blockchain are valid, aligning with trends observed in the wider tech space. However, it's important to remember that the crypto market is highly volatile, and predictions, even by seasoned analysts, can be wrong. His confidence in ETH reaching $6,000 to $8,000 is optimistic, considering its current price fluctuations and the general economic uncertainty. While his enthusiasm is contagious, caution and independent research are paramount before making any investment decisions. It's worth considering alternative perspectives and conducting thorough due diligence, as Becker's bullish stance could be influenced by his own holdings.